Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
You're watching Stockwatch. I'm Simon Brown, and joining me to unpack your stock-related questions today, Cobus Potgieter from Southern Cros Capital, David Shutte from the Reunert Group. Devin Shutte, be sure to send your questions. Email stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV, #Stockwatch. Gents, appreciate the time. I want to kick off, Cobus, let's start with you. The Mondi Q3 update, which the market is absolutely hating. Your thoughts on the updates, your thoughts on, is this giving us opportunity, or are we best just on the sidelines watching?
Very, very, downbeat update, frankly.
Yeah.
Essentially communicating a restructure in terms of how they are reporting, simplifying into two divisions, clearly driven by a lack of demand, and extending planned shutdowns at a lot of their plants simply because they are trying to manage the very, very weak demand. So the market, I think, was starting to price in a little bit of optimism. We've been sort of trying to call the bottom for the market and corrugated for a long time, and it seems there is significantly more pain to come. That being said, they are trying to position themselves as leaner, meaner, and better positioned to exploit any kind of market robustness. But in the short term, especially compared to the previous quarter, so essentially the call it Q2 versus Q3 reporting now, but on a comparable basis, so third quarter to third quarter last year, this is actually a flat result, and the market obviously was looking for something more robust, like what we got from Q2 this year. So we don't have that much detail from the trading update, but pretty downbeat. I think, I love value, obviously, and it remains a quality stock, despite the fact that it lost those Russian assets, which seem to be where the best operating profit margins were coming from in the first place. But I think this is probably a buying opportunity, to answer your question.
Devin, would you be looking at it as a buying? I see Sappi's also down 8% I imagine, in sympathy. Same but different. Mondi, for you?
Yeah, look, the market's just showing how disappointed it is in that earnings miss, and kind of extrapolated what does that mean for the group. I tend to agree with Cobus. I think this is probably close to as bad as it gets, famous last words. But they have to do something else. So they are reorganizing the business. It's still made up majority of packaging. There is still some uncoated fine paper in there. But I think those conditions are really hurting. And what Cobus said around the demand is exactly right. I think the tariffs and the uncertainty around global trade are just feeding into it. And they're really at the sharp end of that. So yeah, I would probably still back them. I don't think it's going to be an easy ride, but I think you've got still some assets and geographies that are attractive, and you're on a 15% sale today, one to look at.
Yeah, absolutely. And as I said, Sappi also taking a tough time. We also had an Altron update. Some good assets in there. Netstar perhaps chief among them. Again, not a lot of colour. Devin, for you, Altron, thoughts around it? It certainly it had been having a really good run, but I think it's had a bit of a tough time recently.
Yeah, tough time. But they're guiding the market. I think it was 16 to 24% higher at the HEPS level. That's really commendable in this environment. I think what I like about the strategy in general is that they're really pushing to drive more of that annuity revenue, led by Netstar, some of the health tech, and some of the financial services industry segments. So yeah, overall, as you said, some nice assets. I think one to look at, and I think a far better shaped business than it was maybe some years ago. So yeah, one we're watching for sure.
Yeah, actually only 15% off highs of earlier this year. Not that much pressure. Cobus, for you, your thoughts on Altron?
It's a reasonable valuation. Yeah, we continue to like it. It seems that they've continued to adopt that attitude of trying to keep things lean and mean, still selling off non-core businesses, focusing on their strengths. The fintech or so-called payment business seems to be doing particularly well, along with Netstar. So yes, we like it. At a forward P of around 11, this looks pretty undemanding, and it looks like it's got legs.
Yeah, no, it certainly is not expensive by measures. Question coming through. Last week we saw a decade high local vehicle sales, literally going back to the September 2015 numbers. Cobus, the question was, best way to play this? Some folks have said the banks, but of course you've got so much else in there. We've got five if you throw We Buy Cars in there. Are you looking around this vehicle space, new, second-hand, aftermarket?
So new would be where I would focus, but when the devil's in the details here, yes. In terms of passenger sales volumes, these are the best numbers we've seen since 2015, but there has been a very consistent down trading trend,
Yeah.
and also a lot of disruption caused by the entrance of the new players into the space. Yes, the big names are getting into those distribution channels slowly, some quicker than others. But in terms of their existing books and where they are winning market share, I prefer Motus. All the other big names, call it the likes of CMH, to a lesser extent, Bidvest and Super Group, are actually shedding a little bit of market share given the down trading, whereas the Kia and the Hyundai brands continue to win market share. So I think Motus is the best position to exploit the good vehicle sales numbers.
Devin, for you, can I interest you in a vehicle dealership?
Yeah, it's a tough old business, right? Those margins are way within. I think what's difficult for the dealerships at the moment is, those new entrants coming in. There's really been a plethora of them, and which are the ones that ultimately gain traction with the consumers is difficult to call. You might get the licensing on a whole host of brands, and they just simply don't sell. So really tricky there. So I think we're in this kind of transition phase with the new incumbents from China coming in. What does that look like from after sales? So I'd play it through what you mentioned on the We Buy Cars. I think they've been a massive disruptor and value adder, or taking value from other players out of that space. I think they're the biggest used car player around.
Yeah.
I know the valuation is stretched at the moment, but what you've got there is you've got a kind of a tech platform-led business. Founders are still energetic and actively involved, and I think everyone's just trying to play catch up in the used space at the moment with them. So that's the one I'd be looking at.
Gotcha. Okay, so Motus and a We Buy Cars. Devin, let's stay with you. Question coming through about British American tobacco. Sold off a bit. Should I worry because I love the sterling yield? Tobacco's a weird one. It's defensive, but it's also surely... I know they've got the new age combustibles and the like, but Devin, British American tobacco for you. And it has had an excellent run and is a decent sterling yield.
Yeah, I had a really good year, and I think it's because those non-combustibles have really come to the fore. If I remember correctly, they're probably ahead of their forecast from a few years ago in terms of what those revenues look like. It's a massively cash-generative business, make no mistake about it. But also be aware to the fact that there's a huge amount of regulatory risk in a business like this. There's risk coming out of potential regulation in Canada at the moment. Menthol kind of always seems to be in the regulators' crosshairs. So, I think the yield is good. It's a sterling yield, fantastic, but not without risk, and particularly the way it's run at the moment. Not to say that it's expensive, but I think you just got to take all those moving parts into consideration when looking at the counter.
Yeah, Cobus, for you, because non-combustibles are doing great, but we will get more and more regulations around it around the world. British American tobacco?
This is my favorite sunset asset. As you rightly pointed out, it's the non-combustibles that are driving the volatility in the share price, and perhaps of course the Republican victory in the US has been accommodated from a deregulation perspective, but ultimately, given this pullback, it is looking quite attractive again. Frankly, their cash conversion is unmatched. So this is a cornerstone of any strategy, assuming you don't care much for ESG.
I take your point in the ESG. On the sunset part, I mean, the point is that it's a sunset industry, but this isn't, this is, I mean, I was going to say years, potentially decades. I mean, there's still time here. This isn't like we've got until, I don't know, February.
No. And I mean, I don't even mean that in a, to some extent, once a business accepts that, and they just manage it as well as possible, we can continue to print money, make enormous profits, literally write this thing off into its sunset. And ultimately, if the valuation remains attractive as it has been, despite the rally, it's yielding enormously in hard currency. It's a nice asset to have. There's nothing. We've got the sort of tendency to chase growth at any and all costs, but there's nice returns to be had in a mature industry. Yeah,
that's it, mature. And you don't have to go and buy yourself an AI or something to make it exciting. You've got a good business, good cash, you can live with it, but they tend to chase everything. Question coming through around telcos. The question is, any offering value after they've run? And the follow-up question was, I completely missed all of it. Cobus, looking out at the telco space on IJC, is there anything that still interests you?
I think given valuation, not fond of Vodacom or MTN. MTN tends to be hit and miss from one year to the next. And there's always a volatility play in, calling the next disaster or calling the next success. And Vodacom similarly, the valuation is a bit stretched. And I think there's going to be continued margin pressures in those businesses. My preferred plays are Telecom, because I think there remains to be some corporate action upside there, and Blue. In the form of the Cell C turnaround. There's some, perhaps it's looking a little bit rich, given what we've seen in the last set of results that the pro formas were built on. But a read-through on the Capitec results makes it look like these MVNO contracts are just absolutely going through the roof. And Cell C said to be a massive beneficiary there. So that value unlock event and getting access to Cell C shares once they do list, that's something that continues to excite me.
Okay, let me try to say it. The Cell C shares, we don't have a timeline yet. I mean, we know it's coming, but they haven't given us a timeline yet for the listing of Cell C.
No, correct. But it is certainly imminent. They've essentially pushed for approval for all of the so-called cleanup transactions, where they are converting all of the very strange forms of debt into equity, diluting the other holders away, and sitting with in excess of 90% of the economic value, so that they can proceed to unlock via listing.
Devin, telcos for you?
Yeah, I mean, I think also, not that exciting if you look at the Vodacom and the MTNs. I like what Cobus was saying around Blue, and particularly more details that we're getting out of Cell C there. I think it's potentially underappreciated. They've released some presentations on it, and going through those numbers at a high level, probably more impressive than I thought. I mean, they've got a capex light model, which is incredibly valuable compared to the guys that have to build their own towers. The business is profitable at an EBITDA level. And some nice ARPU growth there. So I think probably under the radar, obviously being in the Blue stable maybe hasn't been front and center, but probably one we're going to be watching quite closely. Blue's had a good run. I don't know if I'd be chasing it here, but also definitely in the prepaid space, something to watch.
Yeah, I get your point, and it's great to have a new listing coming to the market. Devin, question coming through. Should I invest into Japan? How do I invest into Japan? Is it just an ETF? The Nikkei, of course, up at record highs today in the new PM announcement. Of course, 30-year bonds also at record highs for Japan. Devin, Japan, I always find, I don't know, all the moving parts in the currency. Thoughts for you for Japan?
Yeah, unfortunately, we often get these questions when things are hitting all-time highs. I think you've got to be very cautious. I think Japan came from pretty suppressed and has had a fantastic run, and as you said, new leadership there, and she's been a student of Shinzo Abe, so bear in mind that Abenomics, maybe a little bit watered down, is probably there to stay in Japan. When you take these regional bets, Simon, you just got to be so cautious for all the factors you mentioned: the currency, the domestic politics, the drivers of the economy there, and so if you're looking for a small allocation in a large overall portfolio, ETF is great. It's efficient. We don't have a particular active manager that we back in there at the moment. So yeah, I think a broad equity ETF is probably hard played at the moment if you're looking to get exposure.
Yeah, and we also need to be clear, the highs which it actually made, I think, last year were the highs from the 1980s, just to put things into a smidgen of perspective. Cobus, Japan for you, and it is the point that Devin made, sort of niche regions are great, but difficult.
Yes, and Japan, just investments 101, when we discount future cash flows, we use a rate of return, a cost of capital. And because theirs is always so close to zero, a small shift just causes these ballooning changes in valuation. So it is sort of a swing and a miss type of environment. Probably, just commenting, this election probably, as Devin pointed out, is good for continued fiscal stimulus. Whether or not that's a good idea, given the sort of strange demographic situation we see Japan facing, going more capital heavy, being more industrials focused, this is a negative outcome for the banks, of course. They were hoping for higher rates. It looks like that's not going to be the case. Lower rates, more fiscal stimulus, more industrialization, more capital spend. That is more likely. Pick your poison, I guess. But if I wanted to take that view, I would only really be interested in Japanese equities, not bonds. And yes, I'd also play it passively.
Yeah, I think you're right. It's passive as a way to do it here. Cobus, you kind of alluded to Bidvest earlier in terms of vehicle sales. Question coming through, panel's view on Bidvest. We had the results out, and I've said it before in this show. I thought the market's response to the results was a little bit harsh, and particularly considering how cash generative they are. Those acquisitions they're done, the debt will fade away. Cobus, Bidvest for you?
Well, you've sort of hit the nail on the head for me. I think it's a de-gearing play. The debt will fade away, and that will lead to expanding profitability down the line. The market doesn't like, I think, this latest major acquisition going into the hygiene services market in the competitive space, UK, Canada, US. That's tricky. But I mean, so far, no shockers, frankly. So it is a de-gearing play, and this is certainly an historically cheap entry point into Bidvest. So yes, I like it. I think it's an overweight in my portfolio.
Devin, some Bidvest for you?
Yeah, not much to add there. I mean, I think a bit of disappointment with the recent results. You got a really strong portfolio here, diverse segments, which kind of help it weather the storm. Automotive, international services, branded products, and the like. So, yeah, it's not strong enough for us to be jumping in at the moment. But I mean, it's one that's always on the radar and be watching.
A question coming through around BHP Bulletin, or BHP Group as they are now. Held the share for a while, done nothing compared to my other mining and resource shares. What's the lack of growth, and would the panel advise selling and investing elsewhere? Devin, would you be exiting a BHP Group at these levels? It has been let's be clear, in a gold bugs year for resources. They've got no gold and therefore lagged a bit.
Yeah, that's right, and it's so easy to forget how these diversified miners can really save investors when single commodities aren't running. We've had precious metals absolutely shoot the lights out. Have been the only game in town. But what you've got to remember is that these diversified miners have gotten far smarter in terms of capital allocation and not buying at the top of the cycles. And they're leaner and meaner than they've been in a long time. And I think BHP's mix, geographical and the commodities it's invested into, where they sit on the cost curve, is all where I would want to be placed at the moment. I mean, to call a single commodity is really difficult. So I'd be backing these guys. I think you've got a team that's managed to navigate the last couple of years particularly well. Yes, it's lagged, but gold can't go forever, platinum can't run forever, and at some stage there's going to be more focus on commodities outside that in the industrial complex and the like.
Yeah, it is those industrial commodities. Cobus, some BHP for you?
Nothing to add really. Yes, like iron ore's been the big laggard, and that's been a global phenomenon. And like Devin said, probably not a great idea to be picking single commodity exposure overall. Given the valuations, I'd say I certainly wouldn't exit it at this stage.
Yeah.
I'd hold on and hope for that trend to reverse. But that has been really where a lot of the pressure in combination with energy, of course, it's hard for these things to ultimately be broad based, but they are highly cyclical, and in that space there has been underinvestment as well. So ultimately that's worked for the platinum sector. Hopefully it'll work for the iron ore as well.
Question coming through around Reunert, like it, obviously it's got some defence, it's got some the cable business, which we're going to need locally. Cobus, is it one on your list?
Reunert or Reunert?
RLO.
RLO. Okay. I don't have a particular view. I actually haven't had a look at Reunert recently. We have liked it at given valuation at previous points, but I don't have a view on it at the moment. I don't know if Devin does.
Devin?
Yeah, I mean, I think it's one to look at. The cables business particularly, we think has got potential in that regard. You've also got defense exports that have been doing particularly well.
Yeah.
Some renewable energy solutions as well there. So yeah, overall I think pretty good. They've managed to generate pretty nice margins. Balance sheet looks solid. I haven't looked at the valuation recently, so I'll speak under correction there. But yeah, generally one that we're comfortable allocating to.
Yeah, it certainly has sold off from almost 80 to now just over 50. So valuations perhaps returning here. Let's go to some stock picks. Devin, Master Drilling, they make the kit that makes the mines in essence.
Yeah, that's right. And I don't mind talking about these small caps. We haven't chatted about one in a while. So here's a domestic global small cap. They really do punch above their weight and got some fantastic IP in raised bore drilling. They do things that no one else in the world does. And I think they're quite an interesting way to play this demand for commodities and particularly the green metals. So yeah, they've got a strong order book. That's over $300 million. With another project pipeline of about 500 million. Balance sheet looks in good nick, and they're really diversifying across not only commodities but geographies in serving these miners. So yeah, interesting little company and one to have a closer look at.
Yeah, and I like your point. It is, I mean, they're almost mining agnostic. I chatted with them recently. They got a lot of copper, a lot of gold. One day the gold will fade away, and then they will move their raised balls and go somewhere else and mine something else as the new one comes. Cobus, you going with HCI?
Yes, real bottom fishing today. HCI used to be a darling of the JSE, one of these listed holding companies, and frankly has a history of creating enormous shareholder value in the form of transactions or unbundlings over time, and this has been a total laggard of late. Just sort of peering through the looking glass, what we've been observing and what HCI are essentially communicating to the market is their strategic shareholder, the SA Clothing and Textiles Workers Union, has been in dire need of capital. Union membership is down, and they've essentially been selling down their HCI shares over time. And now, to alleviate this overhang, HCI have done a deal with them, essentially swapping shares in the company for a property portfolio, in addition to doing just an outright share buyback. Yes, diluting their holdings, some essentially halving their holding of HCI, but creating a heck of a lot of liquidity runway for them, hopefully taking that overhang away. And what remains for the rest of us is a basket of assets that are quite attractive at a very, very cheap entry point, specifically Soho, both the hotels and the casinos business. And of course, some optionality in terms of the energy stocks, energy sector. Even though those things essentially you get for free, the discount to hotels and casinos alone is so substantial that this cheap entry point already compensates you for all of that.
Yeah, and of course there's the whole oil and gas, although we don't know how that plays out. That's sort of, I suppose, in many senses, cream on the top if it comes through. That's all for Stockwatch today. Thanks to our guests, Cobus Potgieter from Southern Cross Capital, going with HCI. Devin Shutte from the Reunert Group, going with Master Drilling. Up next to close, stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.